If you know how to do infinite banking and you know how an infinite banking account policy should be designed, then the chances of you getting scammed by a salesperson is greatly reduced. Knowledge is a protection. And believe me, there are sales agents who will take advantage of a person's lack of knowledge in order to sell them something that the sales agent wants to sell and make the client believe that it is what they want, even though the sales agent doesn't really know anything about what the client wants. In this case, infinite banking. Aloha. I'm Stan Cox, principal broker and strategist with SC Finance Strategies and Insurance Consultants. I'm also the author of the books on the Tax-Free Cash Growth Warehouse Strategy, and I'm the managing director of the Hawaii Financial Free Thinkers Academy, a nonprofit financial education organization. For the past several years, I have focused on and specialized in the infinite banking concept and the tax-free cash growth warehouse finance strategy. Now, you may have seen Dave Ramsey's video, Infinite Banking is a Scam. In it, he says that an advisor told him to overfund a whole life policy, and that would become a vehicle for him to use for infinite banking. Then he goes on into saying why that is a ripoff and a scam. It's actually true that just by overfunding a whole life policy will increase the cash value and make infinite banking a possibility. But that's not the best way. And there's more to it than that. If you just overfund a basic whole life policy, and that's not even an option with a number of insurance companies, the cash value will not grow at the rate it will when the account is set up properly and with the right insurance company. So first, let's describe what the infinite banking concept is. Real basic and simple, infinite banking is using the cash value of a properly designed, participating, or dividend-paying whole life insurance policy to finance things. Infinite banking uses the cash value of such a policy by means of leveraging with policy loans. There are a couple of key points there. One is that the insurance policy needs to be whole life. Another is that it should be a participating whole life. So it should be with a mutual company that does pay dividends to their whole life policies, and it should be properly designed. And those key points are where vulnerability to scams lie. Understand, universal life insurance is not the same as whole life, whether it's guaranteed, variable, or indexed universal. That is GUL, VUL, and IUL. It does not work the same, and it is not suitable for infinite banking. Universal life is considered cash value insurance, but the cash values are not guaranteed, and oftentimes the cash value gets cannibalized by the policy, and then the policy lapses, leaving the client with no insurance, no cash value, and many times unable to afford a new policy at their now advanced age and possibly declining health. And that being the case with universal life policies is either unknown to the sales agents that sell it, or they just don't care. And buyer beware. Those sales agents who tell you that GUL or IUL is just as good or even better than whole life for infinite banking don't know what infinite banking is or how it works. Or again, they just don't care. They only care that they get the fat commission from selling the policy to you. Now, universal life policies pay commissions of up to 150% of the first year's premium to the agent. Whole life policies pay a maximum of 55% of the first year's premium and commission. That's why those sales agents are so eager and gung-ho to sell you IUL or any other universal life policy. Another important point is that the insurance company providing the whole life policy should be a mutual company that pays dividends to the whole life policies, making them participating policies. All whole life policies have a guaranteed compounding interest rate associated, which grows the cash value of the policy and is a guaranteed value that can be projected out over any number of years with certainty. And that cash value can be used for infinite banking with the same protections and assurances. But with mutual companies, dividends are added on top of the guaranteed interest, so the cash value grows faster, obviously better. And the third super important factor is the proper design of the account. Again, regular straight whole life can be used for infinite banking once the cash value has grown to a usable amount, but that'll take a few years at least. So the proper design becomes a really big deal. So what is the proper design? And here's where the really right company comes into play. Not all, even mutual companies, have all the design options that make for the optimal infinite banking account. Now, here's the optimal design. The account should be comprised of about 1/3 of the total death benefit as whole life. The other 2/3 as a term rider with which the premium contributes to the cash value. And then a paid up additions rider of as much as the client can afford. That rider's premium also contributes to the cash value of the account. So when properly designed, about 60% of the premium paid the first year will be available in the cash value to be leveraged by the client. With straight whole life, there is no cash value the first year and very little the second year. It begins growing faster and faster as the years go by, but who wants to wait, right? With universal policies, cash value typically doesn't begin growing for a number of years. And again, it'll get cannibalized by the policy later on, so no good at all. Now, if you only commit to memory one thing that you need to know to avoid getting scammed by a sales agent wanting to sell you something under the guise of infinite banking, this is it. Your whole life policy, designed for infinite banking, should give you at least 50% or more of your first year's premium in available cash value the first year. And that'll vary depending on your age and health and on how important the death benefit is to you when the policy is originated, and on how much paid up addition premium you can afford. Typically, my account designs provide 60% or a little more of the first year's premium for the client to leverage. And from there, the growth becomes exponential. In fact, by year 5, the amount of growth of your cash value in that year will equal the total premium for the year, which essentially makes the insurance free from that point on. And by year 10, in most cases, your cash value will exceed the total amount of premiums you've paid into that point. From there onward, everything you deposit into the account and more is growing tax-free profit for you. And of course, it's all completely protected from all outside influences, is available to leverage and finance things for you while it all continues to grow with the high compounding interest and all the rest of the benefits of infinite banking. Armed with this information, you cannot be scammed by an unethical sales agent wanting to sell you something that is not for infinite banking. Infinite banking is not a scam by any means. And in fact, it is the most powerful finance strategy in history Now, if you have found this to be helpful, please like this video and subscribe to this channel. Also, please post your questions and comments here. For a more complete explanation of the tax-free cash growth warehouse strategy, you can watch our free 60-minute webinar. The link is in the description box below. The link to buy my books on Amazon.com is also below. And if you'd like to book a free phone consultation with me, the link to my Calendly page is also below. If you'd like to become a client of ours, the link to the application is also below. We're here to help, and we look forward to helping you. Aloha and mahalo for watching.